Hello, friends. Let's start our today's session. Now, this presentation is for general banking operation. The concept is like uh, as a potential employee of banking sector in future, many students are preparing for it. So, in line to the same, let's give you an overview of what is there in store for people who are planning to go into banking sector in terms of their career growth. Okay, so let's start with the same. And the first segment that we are going to take up is like this is going to tell you about bank and their functions. So if you look into the definition of a bank, you'll understand that the best agency or source for checking the definition of bank is in Indian context is Banking Regulation Act 1949, which actually defines the meaning of a bank. So banking is defined under Section 5B of Banking Regulation Act as the acceptance of deposit of money from the public for the purpose of lending or investment. You see, from this definition, you are able to define what is core banking. So, core banking means it is limited to two basic operations. One is acceptance of public deposit, and with that deposit, after keeping certain due reserves as per the statutory requirement of your regulatory authority, you have to go for loaning. And loaning means this is for like every sector that you have in economy. It is not concentrated lending, but it is like it is a diversified portfolio of different sectors altogether. Okay, priority sector loans will also be a part of it. Let's go forward. Now, in this particular slide, we are able to look into the dimension of bank, where they are on one side they are accepting deposits from public at large. This is also called as net demand and time liability. So you see, liability, why we are using this term liability for deposit is like deposit is actually something that bank have to pay on a future date. So it is a liability for banks. And on the other side, we do have loans for lending or investment purpose. You see, loans are are termed as asset for banks. Why? Because we have to recover it on a future date. When it comes to deposit, they are further classified into two segments. One is demand deposit and second is time deposit. So that's why I use this NDTL. N is net, D stands for demand, T stands for time, and L stands for liability. NDTL. Okay, on RBI's website, you'll come across this acronym a lot. So let's move forward. So now you see why there is a need for a bank or a banking service. You see, the main point is like we need banks so that we can save our money. So you do have an account called a saving account where you park your surplus. Every month you earn some salary or business income. After deducting your expenses, monthly expenses, you have something in the name of surplus. So that surplus can be saved. Initial stages to save first, and then investment maybe a later stage. So saving you require some instruments. So you do have a saving account, followed by, you see, there are many other facilities which bank do offer. They may not be their own services, but maybe they have tied up with some insurance companies and mutual fund companies to sell their product to their clients. So this concept is called as cross selling. It is all allowed. So you see, insurance company and mutual fund, they get ready-made clients for their products, and in return banks are getting their commission. So this helps bank to earn non-interest income from these segments. And then followed by the next segment that we have is credit. Loaning is very important because your entire economy growth, GDP is all dependent on the rate at which you're giving loans to your various potential entrepreneurs, your potential clients who actually require it for some sort of consumption. So when there is a consumption in market, you see, it will add to production, it will add to an employment, it will add to per capita income, it will add to standard of living, everything goes up. Okay, but if there is some sort of a challenge in terms of credit disbursements or liquidity crisis, you see your GDP is going to have a hit because of that. So hence banks are going to play a very key role in terms of credit, followed by the last dimension, and which is the most important, which is like creating financial awareness, doing awareness sessions, creating like some sort of literacy among masses, so that you see what you want is like people should be aware, they should know their rights, and they are able to enforce it. So if there is a dispute between a service provider and a customer, they can go to certain grievance redressal mechanisms like ombudsman schemes which are there in existence. So let's go to the next slide. This particular slide tells us about like various banking products that we have, and the specific segment which is taken care in this slide is retail banking. Retail banking means when you deal with individuals. It is something where you actually customize your product for your customer. Okay, so here you see you do have deposits, you do have loans, you do have other services. So the only thing that we have here is we add this element called as retail because it is given to individuals. Okay, individual at large, one by one. If let's say I'm working in a government company, let me go to a bank, open an account. This is I'm doing it in individual capacity. So when I'm going individually to a bank and opening an account, this is comes under retail banking. But when as an employer, my employer had a tie-up with HDFC Bank, and then you see I'm going to HDFC Bank as an employee. So there are some standard contracts already in place. So they're dealing it with a corporate, big entity. Let's say Steel Authority of India Limited or Coal India Limited. Okay, Coal India Limited having the saving account of their staff member with SBI or HDFC. So this is what is coming under corporate banking. So the only difference is like you see products are almost same. The thing is like in retail banking it can be customized. In corporate banking it is supposed to be standardized. Yani one designation, all people who belong to one particular designation will be given one type of facility. So these are already well defined in the contract, so you cannot do major changes in it. So after this, let's go into some of the illustrative list of services which are provided by banks. You see, funds remittance is very common. Let's say migrant laborers are coming from Bihar and UP to some of your north states like Punjab and Haryana. You see, agriculture is totally dependent on migrant laborers. Now, you see, when they earn some income, maybe during the productive seasons, so they have to send this money back to their hometowns. So banks are a major source who are involved in this. Then next is like you see they are not only doing this, but they are also helping customers, clients to act as an agent for them and making lots of various other service payments that are due. Like electricity bill is there, you have mobile recharge, you do have school fee payment, insurance premium payment. So all these things can be taken care by your banker. Next is like you see it also accepts a tax collection on behalf of government. So you need not to go to government directly. Some of the banks who are authorized, so they can collect tax on behalf of government. So they actually helps and facilitates the entire ecosystem. They also lend money to business, agriculture. They are into housing sector. They are into mortgage. They are into vehicle finance. So all these segments are covered by banks. So they are one more thing very important is like they deal in foreign exchange. So if you need some foreign exchange for let's say some foreign payments, you have to rely on a bank. So now you see here we have given those two segments. One is retail, second is wholesale. Wholesale is also known as corporate banking, where you see you're dealing with a group together in one go with standardized contracts, standardized terms and conditions. And if you don't fit in into these standard contracts and you would like to have something special for yourself, then you have to shift from wholesale banking to retail banking. Yani your individual capacity, your background, your salary slip, your income tax return, maybe check that, looked at to define your eligibility for a particular loan from a bank. Now, this is the first segment. Stay tuned to my channel. You'll see a couple of more videos in line to the same. Thank you.